Well, it is time to talk about your money this morning here on Good Morning Quad Cities at 11. Yesterday was the first day you could file your taxes, but there are some new rules you should be aware of, especially if you live in Iowa. Joining us to help sort through these new tax twists is Dave Elizondo, a certified financial planner, from True Financial Partners, Bettendorf. Good morning, Dave. Thank you for joining us this morning.
Good morning. Good to see you.
Yeah, you too. Let's begin with the tax code changes nationally. So there was something that went into effect just a few days ago, and it directly impacts retirees, right?
Yes, it does. There's a rule for this affects anybody who has a retirement plan like an IRA or a 401k, a retirement plan. There's a rule called the required minimum distribution rule that requires that once you reach a certain age, you're required to start taking out an annual withdrawal from your account, whether you want to or not. Now, since this 1974, when IRAs came out, the age was 70 and a half. So once you reach the age of 70 and a half, you have to start taking out a certain minimum. Well, in 2019, that age was increased to 72. And then beginning this year, it was increased to age 73. So the good news is, if you're under the age of 73, you don't have to take money out of your retirement accounts unless you want to.
So is there any sort of penalty for not following this new rule?
Yes, there is. And that's a great question and something that very few people are familiar with. There's a penalty if you don't take out your required minimum distribution in any given year. The penalty is 50%. So let's put that into perspective. Let's say that you have to withdraw $10,000 as your required minimum withdrawal. And if you don't take that withdrawal by December 31st of that year, the penalty is 50%, or $5,000 in this case. That's a very high penalty. And then on top of that, you still have to take your required minimum distribution and pay the taxes on that. So between the taxes and the penalty, it's pretty painful. Now, the good news is, starting January 1st of this year, that rule has been relaxed from 50% down to 25%. In addition, if the IRS, let's say you don't make a withdrawal when you're supposed to one given year and you catch it early, if you catch it in a reasonable amount of time, and if you have what's considered a reasonable excuse or reason why you didn't, the IRS might relax your penalty from 25% or even from 25% down to 10%, or they might even forgive it altogether. So if you find out that you didn't make a withdrawal and you were supposed to, get it taken care of as soon as you can, and maybe there will be no penalty.
Okay, so the second big change is for retirees, for people in Iowa. Explain this new law and kind of what it means for anyone with an IRA, 401ks, or a pension.
Sure. Well, January 1st of this year, Governor Reynolds passed a bill that said if you're a resident of the state of Iowa and if you have a retirement account like an IRA, a 401k, or a pension, those withdrawals or pension payments are no longer going to be taxed for residents in the state of Iowa. So this is big. You'll still pay federal tax on your withdrawals, but no longer will you pay state tax. So that's a big change for people in the state of Iowa, because we've seen a lot of people retire and move to other states. There's a small handful of other states that don't charge a state tax. So now by eliminating this state tax for Iowa residents, hopefully people are going to retire and stay in Iowa. And since there are so few states that don't charge a state tax, it might even encourage some folks to retire in other states and move to Iowa once they retire.
Well, and how will this change anyone who's approaching retirement and making decisions kind of about staying or leaving in the state of Iowa?
Well, it's all about the taxes, as I mentioned before. You pay federal tax on your withdrawals from your IRAs and 401ks, or if you have pension payments. But now if you don't have to pay state tax, that's very attractive. So hopefully that's going to, again, like I said, that's going to encourage people to stay in the state of Iowa once they retire.
All right, Dave, thank you so much. Dave Elizondo with True Financial Partners in Bettendorf.
Thank you.
Thank you, as always, for joining us this morning.